morning and welcome to Business Buzz. Coming up, Washington moves to calm a sell-off in government bonds, easing the pressure on borrowing costs that has rattled markets from Wall Street to the Naira. The Nigerian exchange falls for a seventh straight session, shedding another half a trillion naira. A Nigerian insurer is wound up and its shareholders wiped out as the recapitalization reckoning begins to bite. And the United Arab Emirates cut all trade with Iran, stripping Tehran of one of its last economic lifelines. I am Louisa Asidi. Stay with us. We began this morning with tourism and a major push to grow Nigeria's tourism sector. As the federal government launches a 100-day tourism campaign aimed at attracting visitors, investment, and jobs, attention is now being focused on Nigeria's tourism sector. For years, the country has struggled to fully enhance its rich cultural heritage, historic sites, festivals, and natural attractions. Challenges such as poor infrastructure, insecurity, weak promotion, and inadequate investment have limited the sector's growth. However, Nigeria still has significant opportunities to rebuild tourism, create jobs, and position the industry as an important contributor to economic development. The new campaign could provide an opportunity to assess what has not worked in the past and develop a more sustainable approach for the future. To examine where Nigeria has fallen short and the opportunities that remained, we are joined by Kelvin Fineface, a consultant and a public good advocate. Okay, it seems he's having some issues connecting, but he will be with us very, very soon. So let's go to the Nigerian Stock Exchange, where there was a different story on Wednesday as the Nigerian Stock Exchange closed lower. The all-share index shared about 861 points, a loss of 0.36% to close at 240,750 points. This is a seventh straight losing session. Market capitalization fell by about 456 billion naira to 155.42 trillion naira. The market's return for the year now stands at 54.7%. Market breadth was even, 27 stocks advanced and 27 declined. Hair Dinner McCall led the gainers up 10%, followed by Coronation Insurance up 8.4%. On the losing side, International Energy Insurance and Aradel Holdings paced the losers, each down 10%. Universal Insurance and Red Star Express were also among the fallers. In all, some 1.19 billion shares were traded, worth about 37.8 billion naira across 34,546 deals. Time now for the wider world, where it was a heavy session for shares, as a rout in technology stocks swept through Asia, even as a late intervention in the bond market steadied Wall Street. Let's start in Europe, where the session was mixed to lower. Germany's DAX eased about 0.2% to around 26,160 points. The CAC 40 in Paris was little changed, slightly firmer at around 8,550 points. London stood apart again. The FTSE 100 was little changed at around 10,730 points. Over in Asia, technology led a much sharper decline. South Korea was the epicenter. The Kospi plunged 5.8% to 6,471 points, in its steepest fall in months. Two names did most of the damage. Samsung Electronics fell almost 8%, and its rival, the memory maker SK Hynix, dropped nearly 10%, tracking an overnight slide in American chip stocks. Japan's Nikkei 225 fell 3.2% to 65,326 points, its lowest close in more than 2 weeks. Hong Kong's Hang Seng was down about 0.4%, while the Shanghai Composite fell around 1.5%. Now turning to Africa, where it was a mixed session across the continent's major exchanges. In South Africa, the largest market, the Johannesburg All-Share, rose about 0.5% to 113,323 points, lifted by its mining companies. Egypt's main index in Cairo, the EGX30, is 0.3% to 55,277 points. Morocco's Marsi index in Casablanca was a touch higher at 18,855 points. In Ghana, the composite index was broadly flat at 15,170 points. Kenya's Nairobi All-Share was a day standout, up 1.3% to 241 points. And in Zimbabwe, the All-Share index is 0.2% to 479 points. Now to energy and commodities, where oil is holding near multi-week highs. Prices are firm as tensions between the United States and Iran deepen. Overnight, the United Arab Emirates cut all trade and financial ties with Iran after accusing Tehran of firing missiles towards its territory, and traffic through the Strait of Hormuz is also slowing. Against that backdrop, Brent crude, the international standard, was holding just above $90 a barrel. United States benchmark crude rose about 0.7% to around $84.70. Natural gas held broadly steady at around $3.90 per million British thermal units. Gold shot up yesterday to around $4,563 an ounce, lifted by a weaker dollar. Back on Wall Street, stocks steadied after Washington stepped in to calm the bond market. The United States Treasury said it would at least double its buybacks of longer-dated government debt in a bid to arrest a sell-off that had driven borrowing costs to their highest in nearly 2 decades. Bonds rallied on the news. The yield on the 30-year Treasury fell about 7 basis points to 5.21%, having touched a 19-year high of 5.33% a day earlier. The 10-year yield eased to about 4.66%. On the back of it, the main indices edged higher. The Dow Jones Industrial Average rose about 0.2%, the S&P 500 up about 0.3%, and the Nasdaq Composite up about 0.1%. However, the chip makers felt once more the small weakness that had battered Asia. The standout gainer was the drug maker Moderna, whose shares more than doubled in a single day after a successful cancer vaccine trial. Its partner, Merck, rose about 11% to a record. So now we're going to take the interview with Kelvin Fineface on the tourism sector in Nigeria. So you're welcome. Good morning.
Yeah, good morning. It's my pleasure being here.
It's also a pleasure to have you on the show. So I want to ask you a couple of questions. First of all, what do you think the federal government is hoping to achieve through the 100-day tourism campaign?
Well, if you ask me what I'm hoping that they want to achieve, it's simply like getting to want to know what a couple is doing in their home, because the federal government, hasn't been able to give us a blueprint to look at and to see. But if we go with the buzz and from the launch of the 100-day campaign, Embark to Remember project, I think it's a laudable idea. It's the right decision to take at the moment that we have Nigerians being blocked from, almost all the countries you find abroad. They are being driven away, mostly in Africa and Middle East. We're suffering a lot as a result of people who are trying to want to migrate to other regions for survival. Why is this so? It's because of so many years of neglect in the tourism sector. I remember a few years ago, many years ago, about a decade plus now, I visited Bayelsa, Yenagoa, Bayelsa, and I was taken to the Christmas tree, which is the first oil well in Oloibri, and something struck me. What struck me? I traveled to Cuba many years ago, and in my course of going around the city of Havana, I purchased some artifacts, and one of the artifacts that I purchased was made from a cow bone. And that's meant like, what are we doing? These people could use cow bones, to create an artwork that looks so fantastic. Another artwork that I bought was the first Indian that was burnt alive by the Spaniards. It was made, from a ceramic material. The storylines makes it so beautiful to want to purchase. And I looked at the Christmas tree and we don't have anything around it. So I came up with the concept of building a more like a tourist point for the Christmas tree, a house that will have a simulator, try to give tourists the feel of what it felt like the first time the oil was struck in that place and how all this happened. The concept was sort of the government of the day wasn't bought. The next government that came bought the idea, but all they simply did was to use it to make some good money without implementing anything. And recently I was told that something is being done to that regard. See, we have lots of potential. I've had the privilege as a citizen of this country to travel to about 31 states, including your city. And I've driven through these states that I just mentioned, from the south to the north, Katsina to Rivers to Oshun to Bauchi or Gombe, Borno, Yobe, and all of that. And you get to see iconic places, beautiful things to look at for things that we can generate stories. I know that one of the things that comes to tourist attraction is mythical stories. Some stories that we read about abroad, they are not necessarily true. They are just stories being given to sell whatever it was they're selling as a tourist attraction. A case in mind was an experience I had my first time to Dubai and stayed in Burj Al Arab a few years back. And I was taken through the um, so-called the submarine lift in the Burj Al Arab, right? And we got into the submarine, in quotes, so to speak, submarine that were going under the water in the building. And it was so exciting. I was so excited about the experience. Not for me to be told it was a simulator after the experience, and that's a selling point, right? And so we need to look at things that we can do to get our people. So if the government wants to do $100 billion economy, it's very possible because we have the sites, the sounds, the places, the people with which we can harness to generate that $100 billion revenue. We currently have a few things going on, but poor data is making it difficult. So we need to look at how to be able to have the accurate data in that sector and also have the right security architecture in that sector, then empower our people, human capital development, to be sure that they offer the right service. If you travel abroad, everybody, if you go to Rwanda, for instance, and you drop in Kigali, from the airport to the last place you go to, they're all tourist ambassadors, the citizens of that country. They tell you the stories, they tell you places, they look out for your good. Of course, there are skirmishes of, criminalities here and there. Also, outskirts of Kigali, if you go to those places, in fact, the citizens will also tell you have to be careful in this area because of how those areas have been designed. So we can do better.
Are there roles that they should play in developing and promoting tourism in Nigeria?
You say if there are roles, I don't get that.
The state governments in Nigeria, do you think there are roles, duties that they should play in developing and promoting tourism in Nigeria?
Obviously, yes. They have major roles to play, even to the local government also. We run three tiers of government, the federal, the state, and the local government. And each of these chair have high sense of responsibility. The government, the federal government, is basically more like a coordinating window. We are supposed to be a federating states. Unfortunately, we don't have that physical federalism being practiced effectively so. And so we are struggling where the state governors only find ways to want to collect federal allocation without generating enough revenue. I went with the clients to offer, an enterprise threat analysis for a client somewhere in Kogi State. And to my shock, what I found there, we're just going through the bush path and fetch, sand and run through the water. But that was gold. It wasn't dog. It was just fetched from the sand. I don't want to mention the name, somewhere in Kogi. Now that's potential tourist attraction. We can build something around it, right? But again, when the people are not well empowered, the locals are not well empowered to understand the potential benefit of the things they have around them, they will destroy it because when the importance of a thing is not known, is that business is inevitable, as we often will say. So the governments, the local government, the state government need to begin to look inwardly and see how they can harness certain potentials. There are places you get to. If I'm traveling to my village, for instance, my kingdom, which is Kola, for instance, and I go through the river, Sombrero River, at some point you will meet the salt water and the fresh water flowing together, not mix. You'll see it. That's a tourist attraction. Out
Okay.
there, if my local government chairman understands this potential and starts, gets a ferry boat to take people there, then there will be a valuation, a benefit. The camp for the boat, the drivers for the boat, the boat builders, the distributors of the engines, and the other locals who provide other, ancillary services will all benefit from it. Then people who want to go and experience that fresh and saltwater mixture that doesn't get mixed. I see people traveling from here to Mexico to experience something, or somewhere in California also going to experience those things. We have it right here in River State, heading towards River Sombrero. If you live in San Bartolomeo to River Sombrero, you get to meet the saltwater and freshwater, flowing together without being mixed. So that's a tourist attraction. I will have a stretch of beach land in my community in Kola Kingdom that stretches up to about 3, 4, 5 kilometers and not even utilized for any tourist attraction. We have everything that we need to do that. So it requires for the local government to begin to look inward. But of course, when you have this free money, everybody comes to Abuja with their portfolios and get what they will have and they share the money and do it. And the worst part is the fact that as a country, we haven't truly had leaders who had the best interests of the people at heart. What we've had is what I would call misfit opportunists in positions of authority. And so when you put people who are not qualified in key offices, one of the first things they do is to destroy every known structure because they don't have what it takes to build on anything. And so that's what happens. So it now behoves on us, the electorate, and those who are eligible to vote to not only register to vote, but to understand the dynamics of democracy and politics, to know that the voter's card is the most powerful tool in a democracy and the only tool that legitimizes the office. So we need people to understand this so that when people come for political offices, we need to ask for the right social contract. But we don't have that today. So you have people who just go there, who don't know why they are there. They are just being selected to be in those offices, and they don't have any responsibility they owe to the people to provide, insightful leadership as a way to be able to get things, working for an egalitarian society. We don't have that at the moment. But government across the three chairs need to work so very hard to get things running. I
Okay.
like what the ministry is doing currently, and I hope that they'll be able to bring it down to the last level and also bring, a curriculum to teach people from primary schools to understand the importance of tourism, so people can look out for things with which of value to protect and build nationalism and patriotism, in our people.
Okay. Now, one more question. Do you think there are things Nigeria can learn from countries that have successfully used tourism to grow their economies?
Of course, there are many countries you can learn from. If you look at Dubai, for instance, Dubai's economy is currently majorly dependent on tourism. Yes, they have oil, which is more like not much being done on that. They just use the oil to pump it to tourism. And so every sector of that area understands the importance of, tourism, and they're working in that direction, you know, across board. So if you if you look at countries like Kenya, Rwanda, especially Rwanda, it's doing so much with tourism. It's a landlocked country, but living so well organized economy, organized, is consistent, and trustworthy government, well established processes, for businesses to thrive, and you just have that in Africa. If you go to Gambia, for instance, there's the tourism section is booming. And although it has a particular type of tourism, which has to do with, on the emotional side, because there are people who leave Europe to go look for the men there. It's a type of tourism anyway. And you also have some countries like Grenada and the rest of them. I've been to Bahamas and I've seen what tourism has done in that country, has helped them. The small island of Bahamas has also thrived as a result of tourism. The big hotels are there, 3 stars to 5 stars hotels are there because the enabling environment. I've been to Cuba. I've also seen what tourism is doing there, even though they're more like a pariah state as a result of the Western domination and influence and suppression. You go to places like Switzerland, there's a whole lot of potentials we can learn from them. How they do with, they use their own weather to make money. A place like city like Venice, for instance, is what submerged. But guess what? It's a major tourist attraction. Yeah, when they explore, we laugh about it, we abuse, we curse, we do those things. Venice is overflooded, but what did they do? They have the gondolas. They use that to carry people to ferry people around. People travel from Nigeria to go and experience that. I mean, flooded area. Can you imagine that? So we can do much with that too. You
Okay.
know,
Thank you so much, sir, for your insights in the tourism sector. It was really wonderful having you here on the show.
it's a pleasure always. Anytime, you can
Okay,
always do
thank you
that.
so much, sir. So we're going to go on a quick break. When we return, how a bond sell-off half a world away is landing on the Naira and the Nigerian exchange. Welcome back. Let's look at the sector round with the banks and the markets and the local edge of that global bond story. As United States borrowing costs climbed to 20-year high this week, analysts warned the pressure would be felt here at home. The mechanism is simple. When American government bonds pay more, global money flows towards them and away from riskier markets like Nigeria's. That pulls dollar out of the local market, weighing on the naira, and it dulls foreign appetite for Nigerian shares, part of the story behind the exchange 7-day slide. For now, Washington's move to calm its own bond market offers some relief. However, the episode is a reminder that Nigeria, for all its domestic momentum, is not insulated from the price of money abroad. Staying with the financial sector and a hard ending for one insurer and for its shareholders. The regulator, NACOM, has revoked the license of Universal Insurance and appointed a receiver to wind up the company. The action, which took effect on the 14th of August, followed the firm's failure to raise its capital to the level the reform law now demands. For the market, the cost is stuck. Shareholders now have seen some 13.6 billion naira in value all but wiped out, as the stock slides towards worthless paper. Universal was once again among the fallers on Wednesday. This is the recapitalization reckoning made real. A stronger, better funded industry is the goal. But for the owners of the firms that could not make the grade, the reform has a price, and it is being paid now. Now to the energy sector and a foreign vote of confidence in Nigeria's power network. The government of Japan, through its development agency, has committed 20 billion naira to expand and rehabilitate Nigeria's electricity grid. The money, about 2.35 billion yen, will go to Apapa Transmission Substation in Lagos, a critical node where rising demand and aging equipment have strained supply. It follows a recent upgrade that added more than 200 megawatts of transmission capacity to the Lagos network. Power remains the binding constraint on Nigerian industry. Every megawatt that reaches a factory floor reliably is a small piece of the productivity puzzle the country has spent years trying to solve. Still in the energy sector, and a quieter but far-reaching shift in who controls Nigeria's electricity. The national regulator has handed oversight of Akwa Ibom's electricity market to a new state commission. This makes Akwa Ibom the 17th state to take control of its own intrastate market under the electricity law that has broken the federal monopoly on power. The Port Harcourt Distribution Company must now set up a local subsidiary licensed by the state with the full handover due by February. The promise of this reform is competition and accountability closer to the consumer. The test, as always, will be whether the vowed regulation delivers steadier supply or simply a new layer of it. Now turning to technology and the creative economy, and an unusual name eyeing the Nigerian exchange. The musician and entrepreneur Mr. Easy says he intends in time to list a technology company on the exchange. The founder of the talent and payments group behind Empower Africa cited Nigeria's own business moguls as his inspiration and said he wants ordinary Nigerians to be able to own a piece of what he builds. His interest lands as the exchange presses fintech and technology firms to list at home so that local investors and not only foreign venture funds share in their growth. This is a small signal, but also a telling one. In a market whose capitalization has grown more than fourfold in 3 years, the next generation of Nigerian wealth is beginning to look at the local broad. Now to small businesses and the household pulse and a sobering read on Nigerian savings. A new report from the fintech MoneyPoint finds that unexpected expenses derail the savings plans of some 73% of Nigerians. It chimes with wider survey data. The share of Nigerians saving each month has fallen sharply over the past 2 years, and a majority now hold no emergency cushion at all. The cost is not indiscipline, it is arithmetic. When rent, transport, food, and energy consume the pay packet, there is little left to set aside, and a single medical bill or repair can erase months of effort. For a country building its financial inclusion story on digital savings tools, this is the hard ground beneath the headline. A savings culture needs first something left over to save. One more from the sectors, and a flex to aviation, where a dispute at the airport gate is hitting the travelers' wallets. The airport's authority has suspended the pickup operations of ride-hailing platforms at Nigerian airports pending a concession process. The apps had been the cheaper alternative to the licensed airport taxis, whose fares many travelers have long complained about. With the apps borrowed at the curb, passengers are pushing back towards those pricier taxis and the cost of the last-mile home climbs. This is a small tax on mobility, but also a familiar pattern. When access is bottlenecked and competition curbed, it is the passenger who pays the difference. It's time now for another break. When we return, the reforms the government says pulled Nigeria back from the brink and a record payout to the Treasury. Welcome back. Now turning to the economy and policy, where the government is making its clearest case yet for the pain of the past 2 years. Nigeria's finance minister says the overhaul of the economy has helped avert what could have been an overnight collapse. The scrapping of the fuel subsidy and the freeing of the naira have, in his account, stabilized public finances, lifted the foreign reserves, and begun to draw investment back. This is a familiar defense and a contested one. The same reforms that steadied the books also drove the cost of living squeeze that households are still living through. The government's argument is that the alternative was worse. The measure that matters now is whether stability at the top finally reaches the bottom in steadier prices and real jobs. Staying with the public finances and a number that shows the reform revenue coming through. The 3 years of government shared a record 3 trillion naira in revenue in the latest monthly distribution, an increase of about 18%. Part of that reflects a new tax framework which has shifted more of the value-added tax pool towards the states and away from the center. Under the change, states now take 55% of that pool, up from 50%, while the federal share has fallen to 10% from 15%. The significance is where the money now sits, more revenue closer to where services are actually delivered, but only if states convert bigger allocations into roads, clinics, and schools that people can see. We'll have one more break. Still ahead, inflation cools sharply in South Africa, and a South African lender sets its sights on Lagos. Welcome back. Now to the continent, where we begin in South Africa, where inflation has cooled sharply. Consumer prices rose 4.3% in the year to July, down from 5% in June, and the first slowdown in 5 months. The relief came from softer food prices, gentler council tariffs, and a steep fall at the fuel pump. Most striking of all, food inflation slowed to just 0.6%. Its lowest in 16 years, helped by a bumper harvest. The contrast with Nigeria could hardly be sharper. Where South African food inflation is running near zero, Nigeria's is above 20%. A reminder that the same word inflation describes 2 very different realities across the continent. Staying in South Africa, and one of its biggest banks is looking north. Absa, the country's 3rd largest lender, is weighing a merchant banking license in Nigeria and a return to Angola after nearly 2 decades away. The push is about spreading its bets. South Africa, Ghana, and Kenya together account for the bulk of the group's earnings, a concentration its chief executive calls a vulnerability. A license in Nigeria would give it access to capital raising, advisory, and trade finance work in the continent's largest economy. This is the second South African financial giant in as many weeks to signal a Nigerian push, a sign that the reforms are drawing the continent's serious capital towards Lagos. Now to international business and the story that has driven markets everywhere this week: a sell-off in government bonds, and the moment government began to push back. Borrowing costs for the major economies have climbed to their highest in decades. In the United States, the yield on the 30-year Treasury touched its highest in nearly 20 years. German yields reached levels last seen in 2011, and French yields have climbed sharply since June. Investors point to a mix of forces: heavy government borrowing, inflation that will not fully retreat, and a wave of debt from technology companies funding their spending on artificial intelligence. On Wednesday, Washington blinked. The United States Treasury said it would at least double its buybacks of long-dated debt from $2 billion to at least $4 to steady the market. Bonds rallied and yields fell back. However, analysts warn the relief may be temporary. The deeper worry, the scale of government deficits, has not gone away. And one weak debt auction this week showed the appetite for long bonds is thinning. When the price of money rises for the world's largest economies, it ripples outwards. And as we heard earlier, emerging markets like Nigeria are not spared. Now to the corporate world, and a dramatic day for one American drug maker. Shares in the vaccine maker Moderna more than doubled after it reported successful late-stage results for an experimental skin cancer therapy. The treatment, developed with Merck, is a custom-made vaccine tailored to each patient's own tumor and designed to stop the cancer returning after surgery. Analysts expect approval next year. The science is the headline. It points towards an entirely new class of medicine, one that trains a patient's immune system to fight their specific disease. For a company whose fortunes had faded since the pandemic, this is a striking turn and a reminder of how much value can still ride on a single trial result. Staying overseas and to the world's food basket, where prices are climbing again. Wheat prices have surged towards a 3-year high as escalating attacks on Black Sea ports threaten to choke off exports from Russia and Ukraine. Together, the two countries supply about a third of the world's wheat. One research firm warns the disruption could cut global supplies by as much as 17% of cereal exports this year. Forecasters now expect global food prices to rise almost 12% over the year. For Nigeria, an importer for wheat for the bread and pasta on millions of tables, this is a warning on the horizon. Another imported pressure on the food bill that is already the heaviest burden most households carry. Now to the Gulf and a sharp new turn in the economies of the Middle East war. The United Arab Emirates has cut all trade and financial ties with Iran after accusing Tehran of firing missiles towards its territory. The move strikes at one of Iran's last economic lifelines. The Emirates has been Iran's biggest trading partner and Dubai its gateway to the wider world, handling around a third of Iranian imports. Iran has denied responsibility for the attack. But with Washington tightening its own pressure, the loss of the Emirates leaves Tehran more isolated than at any point in the war. The consequences reaches the pump. It is this same tension and the slowing traffic through the Strait of Hormuz that is keeping oil above $90 a barrel and is also feeding the important inflation felt far beyond the Gulf. And finally to Japan, where the cost of that same conflict is now showing up in the growth of figures. The world's fourth largest economy grew just 0.3% in the second quarter, a slower pace than expected. This is the first full quarter to carry the weight of the Iran war, which has driven up energy costs for an economy that imports almost all of its oil. Exports helped by a weak yen did the heavy lifting, while households squeezed by higher prices kept their wallets closed. This is a preview of a wider story. When conflict in the Gulf lifts the price of energy, the bill lands everywhere, in Tokyo's growth rate and in the cost of a liter of fuel in Lagos. This is all we have for you today on Business Buzz. I am Louisa Asidi. Thank you for watching.